Hey everyone, it's Blair here at Time Trades. Thanks for joining me this weekend. It's Sunday, August 7th. This is your weekly video. I want to continue the train of thought we established last week with the importance of Gann waves, and we're going to drill down on that a little bit more. We're looking at our framework for decision making. You can see that after last week, we moved Gann waves up in the importance of understanding the broader context. These are really critical to understanding and interpreting, or possibly even discounting, the daily forecasts. One of the things I want to emphasize is, you do need to apply your own judgment to the daily probabilities that are coming out of the Time Trades app. You cannot just sort of take those literally and assume they're always going to be correct, because these are subject to inversions. There are limitations, as I've talked about, in terms of the data availability that we have for these daily forecasts. So a lot of my work and thinking lately has been in trying to figure out, okay, what's the best way to look at the overall price context to inform the daily forecast. And this is where Gann waves comes in. So we're going to spend some more time on that on this week's video. Okay, so first I want to talk a little bit about what improvements have been shipped in terms of the machine learning additions. We've added a few new data points here. All have been proven to increase accuracy. These are now live in the current forecasts. We've added perihelion and aphelion for when Mercury, Venus, and Mars are closest and furthest from the sun. We also added the time periods when Venus heliolatitude crosses 0 degrees, basically the ecliptic plane. And we also added Mercury distance from Earth. So all of these have been shown in my testing to improve accuracy. They're now part of the production machine learning that's available on the website. Okay, I also want to talk briefly about the roadmap for Time Trades and the things that I'm working on coming up next. There's tons of great ideas out there. Thank you very much for sharing those with me. Some of what you see here are ideas that have been shared with me from Time Trades customers. So the first one is sort of a foundational piece of work that enables one of those customer-driven ideas, and that's automating the calculation of the influencers. The influencers identifies the key data elements that have the most influence over the probabilities. So this helps to identify among the 1,500 or so different data points that we have in Time Trades, which ones matter the most, right? Obviously pretty important. And once we know which ones matter the most, then we can start to display those on a TradingView chart intraday. And these will be custom and unique per symbol. So this is part of the overall objective of Time Trades, and that is to figure out what matters using modern technology, machine learning, figure out what has the most influence over price, and then make it convenient for you, make it accessible and easy to display on your chart. And as we know, every stock or commodity or crypto has different influencers over their price. So ultimately, we want to get that in your hands so that you can see on an intraday chart which of the most important influencers are coming up next. And then finally, the third idea here that's on the roadmap is I want to add downloads of the TradingView script for key historical time periods, right? So 1929, of course, the epic crash of 29, that is commonly used. I see tons of poorly thought out analogs on Twitter comparing whatever the current time frame is to 1929. Same thing with 1987, 2017, the last crypto pump. But then I also want to add in 1927 as well. And why would I be interested in doing that? 1927 is actually referred to in Gann's book, The Tunnel Through the Air. That's when he had his major Motors campaign. So this was a big sequence of trades that the protagonist of that book engaged in. And for those of you that are attempting to decipher that book, I think the additional value of having the time trades trading view script there so you can correlate it with dates mentioned in the book would be super helpful. Okay, so that's the roadmap. Now let's flip over to some charts and we'll take a look at Gann Waves. So we're going to start with TradingView here. You're looking at the NASDAQ futures, and I've added on Matt's square of 12. So this is a pair of exponential moving averages. One is 103-day or 103 period exponential moving average, and the slower one is a 144. And combined, these provide some very useful information to help to interpret price. The other thing you're looking at here is the time trade script. So that is configured to display the Gann waves and the magic levels. So one of the things that I've noticed about Gann waves, and I shared this with you on the on last week's video as well, is that changes in the relationship between lows and highs of blue and yellow often indicates changes in trend coming up. So typically blue marks a low, yellow marks a high. So this is sort of expected. But then when we get into a situation like back in early November when blue marks a high, the standard method of interpreting this becomes inverted. So this is starting to signal that a trend change is imminent because we're getting blues as highs when we should be seeing yellows as highs. So we got a yellow as a subsequent high after that. The standard pattern resumed with blue as a low. And then we got another weird scenario where yellow was a low as well. And that marked another inversion where blue became a high. And then ultimately we started to see yellow as a low. And this is where the rug pull really began, is when we see yellow Gann waves, which typically should be highs, when those are coming in as lows, then that's a problem. And we could see a significant dump down to the next blue Gann wave day at the end of January. So I mention this because we may be coming into a similar situation to that, okay? We just had a yellow. So there should be some sort of lower blue. Now, it doesn't have to be below yellow, but there should be a few red days heading into here, right? And then that will continue to be a healthy trend, and then we could see a move up into the next yellow. So we've been in this pattern of blue low, yellow high, and will we get a blue low or a blue high? I don't know. This is compounded by the fact that we have the CPI release on August 10th as well. So it looks like that could be a volatile day. The other thing that I'm trying to do with my own personal trading is simplify it and make a few less decisions. And one of the things that I have found consistently works is magic levels, and just simply trading in the direction of the last magic level cross. You can see here we've had 2 recent magic level crosses. Well, the actual cross here was on July 21st. I'm going to zoom in so it's easier to see. So we first had a close above this magic level on July 20th, and then we separated above. And typically, whenever there's a magic level cross, there's a retest. We come back down, we successfully retest that. Even though we probe below it, we never really close below that magic level. And that, since then, it's been nothing but green days. okay? And that wasn't even the most recent magic level cross. Going back, if we go back to, say, end of June, we had a magic level cross here. You can see in the Heikin-Ashi bars, they went from trending red to a green doji indicating indecision, and then green up with a close above, and then finally separating above. So we did this cross on July 7th, came back, retest, right in line with the blue Gann wave, and then pop, we're off and running. Okay, so I really think this combination of using magic levels and Gann waves is the key to simplicity with the time trades information that we've got out there. So these are things that I'm going to be talking about more going forward, and really focusing in on those. I won't be ignoring the probabilities, but I'll be, sort of emphasizing the reduced importance of the of the probabilities, if that makes sense. Okay, so we're coming into a major area here of potential resistance. We've crossed the square of 12. Often that's an area of resistance. We're right at a magic level here. Again, often that's an area of resistance. And we've got a blue Gann wave coming up. Plus, if we go and take a look at another piece of information here, we've got the cheat code. Now, the cheat code indicates sort of exactly halfway between eclipse seasons on the moon. So that is a teal line here. And if you notice, there's a fascinating pattern. The last 1, 2, 3 purple lines. So these have all been highs. And then we've got another one coming up August 8th. That's Monday, tomorrow. That, if the pattern continues, that could be another high. And there's a potential for a few red days as we get a sell-off here into CPI day on Wednesday, which is also a blue Gann wave day. That being said, to keep things simple, we are still seeing patterns of price moving up, holding above these key magic levels, and I think we need to be open to the potential that continues until we see price decline below a magic level. So I think my primary scenario here, if I could find the path tool, where is that? Here we go. The primary scenario that I've got in mind is something like this, where we see a pop into the cheat code day, which is just like the purples, even though it's a teal. Teal indicates it's halfway between eclipses. So we've got this could be a high, and then we could see some sort of reaction correction from the combination of the magic level and the blue Gann wave here. But then if the pattern continues, we could see another move up, crossing this latest magic level up into a yellow, the next yellow Gann wave in late October, late August 22, 23, right around here. That would be consistent with the prior pattern that we've seen. So I know there's still a lot of bearish sentiment out there. I know some of the daily probabilities on time trades still reflect some of that bearish sentiment and some of that bearish down pressure. I'll talk about that in a bit. But this is really my primary scenario going forward. And it's all just based on continuing with what we've seen in the past, right? And keeping things simple. We can see lows on the blue Gann wave. We can see highs near the tops of the yellow Gann wave. And we can also see that we're close to a magic level here, where rarely do we go through these on our first attempt. Often it takes a couple of tries to get through. So that's the scenario that I'm going to be tracking going forward. And we'll see how that works out over the next couple of weeks. Okay, now let's go and take a look at the application. We're gonna go through some of the usual suspects and symbols and indexes that we look at. So we're looking at the cues right here. And a number of these that you will see have bearish interpretations, right? You know, specifically the cues. We've got a big old pivot low here right around August 23, and that completely contradicts what I just said about the cues possibly making a high around that area. Well, I think it's important to understand exactly how these probabilities are calculated and where they come from, and the fact that they're subject to inversions. So it's very possible that this probability here could end up, instead of being a probability of a pivot low, could end up being in reality a probability of a pivot high. And you should really look at these things as periods of primarily probabilities of a pivot first, right? That is, and then secondly, the direction. So the primary probability here is that this is going to be a pivot of some sort, right? And then the second part of that forecast is it a low or is it a high? Okay, so I find it interesting that the probabilities of the pivots here are pretty high right around the second teal line day. So the system is obviously extrapolating some of the recent behavior and projecting that into a low. That may be informed by some of the recent price action that we've seen. So we can see over here that the machine learning saw that a teal line day back on February 23rd was a low, was a pivot low. So that could be informing the forecast for the next 2 weeks. So that being said, it's super important to apply your own neural network to these forecasts, and that's why the context of it is so important. Okay, so I'm looking at this and I am consciously discounting the fact that this is a pivot low. I believe there will be a pivot around this area, but until we see a price decline through a magic level, the trend continues to be up. So I'm looking at this as a pivot high and not a pivot low. Okay, so let's look at spiders. Okay, spiders has a few red days coming up here, and then it's got another big pivot on August 22nd. The same comments just apply to the spiders that I just mentioned around the cues, that primarily these are pivots, should be seen as pivots first, and then add the directionality second. Okay, let's look at the diamonds. All right, so the diamonds forecast is actually pretty quiet. Again, the primary piece here is a cluster of pivots around the August 22, 23, 25 timeframe. So similar interpretation to this. The diamonds have definitely been weaker than the cues and the spiders going forward. So we'll see if that starts to confirm some of the price action that we've seen. Let's look at IWM. IWM has been really quite strong lately, recovering from 170s up to the 190s. And looking ahead here, we've got some low probability moves and I think that's that seems to be in line with kind of the choppy period that we tend to see around these teal lines. We expect to see a little bit more volatility. And then there's some probabilities of another cluster of move here around August 22, 23. So this date, August 22, 23, is a pretty consistent date and an important date coming up in the next couple of weeks. All right, let's take a look at natural gas. I've been tracking that really closely. Now, this is a very bullish looking forecast. We just finished a pivot low here on August 5th, and that was really quite mild. And the next major pieces of the forecast are August 22 through 25th. We can see some pivot highs. And also September 27th, we can see some pivot highs as well. Now, I'm taking this forecast fairly literally, and part of the reason is just the fundamentals of North American natural gas market and the huge demand that exists outside of North America for our relatively cheap gas. So I don't usually trade on fundamentals, but the demand for exported natural gas is huge, and there will be a big increase in export capacity over the coming years. Another piece of information is that August is historically a very bullish month for natural gas because we still have the heat of summer going on, and they're also trying to fill up the storage basins for upcoming winter. So there's lots of bullish tailwind here for North American natural gas, UNG. And I look forward to seeing how this plays out through the next couple of weeks into this pivot high, August 25th. Okay, let's take a look at bonds. Bonds are super interesting right now. We've got TLT, which is the 30-year, and the dominant feature here is coming down into a pivot low. So taking this literally, that would mean bond prices going down, interest rates going up, and that's giving a little bit of a headwind to stocks. That is especially true when you take a look at IEF. IEF has a little bit more red up here, and you'll notice this is also right around the CPI date. So again, if we take this literally, it would seem to indicate that if this plays out, this would seem to indicate that the CPI news indicates still more inflation and more demand for higher interest rates to reduce that inflation, thus pushing bond prices down. That being said, it's relatively localized, and we still see once this little bit of red is over, there's a lot of green after that. So this provides a little bit another supporting argument to a bullish stock forecast after potentially a few red days this week. So there could be another bull move in stocks kicking off once we get this CPI news behind us, heading up into August 22nd, 24th, in that range. You can see this lovely confluence of moves up here, heading up into the pivot highs. So again, I'm applying some judgment to these probabilities. Some of these I'm discounting. Some of these I'm taking at face value. I encourage you to do the same. Let's take a look at crypto here, starting with Bitcoin. So Bitcoin's had an extended period of potential pivot lows, and that's kind of been sucking price down a little bit. We're also coming up into this teal line period, which again is midway between eclipses. So we can look back at what happened in the last teal line period to see what happened here, and it was indeed a bearish move from February down through to February 24th. There was a little bit of a pop up, and then on the first teal line, and then a decline into the second teal line. There's potential that could happen again here as we see a lot of down pressure on the forecast for Bitcoin, and that reduces after the second teal line around August 19th. Okay, so let's look at Ethereum. Ethereum is almost the reverse of that, which of course doesn't make sense because we know Bitcoin and Ethereum trade basically very, very similar to each other. Ethereum has a big pivot high over here, August 21st. So one of these forecasts is wrong. Again, another good reason to apply your own judgment to this and always defer to price. So we've got a pivot high August 21st, but if we take a look at Bitcoin, there's no such pivot high around August 21st. There's instead big moves down. There is some pivot high over here, August 23rd. But this is really conflicting, right? So it doesn't make sense to have moves down and pivot highs kind of side by each. So one of these forecasts is wrong. I think it's likely that the pivot highs here invert and become pivot lows in reality. We shall see how that plays out. This is why I always recommend to use price as the most important tool, especially crosses of magic levels. So watch those really closely. And as we get closer to these dates, the price action should clear up whether these are indeed pivot highs or will become pivot lows. Okay, so that's Bitcoin and Ethereum. Let's wrap things up. We'll take a look at HCL Technologies in India, and HCL has regained this magic level here quite nicely at 950. So that's very encouraging. However, there is this cluster of down days coming up through August 22nd. So we're going to have to be very aware of that. I would recommend, definitely putting a stop just below the magic level here in case this does end up inverting and continuing on up to the pivot high on August 24th. So use the magic levels to help establish your risk management levels. And so in case this turns into a move up, which it very well could, then you can ride that up into the pivot high August 24th. Okay, so that's the video for this week. Thanks again for watching and using time trades. We will catch you again next week. Bye now.